Well, the U.S. dollar is under pressure. It's been our top line story this morning. It has boosted global currencies, including our Canadian dollar. Our next guest says, however, the weakness in the U.S. dollar could be short-lived. That's his call. Bipan Rai is North American head of foreign exchange strategy at CIBC Capital Markets, and he joins us right now. Bipan, this is a story being watched around the world. The U.S. dollar always is watched around the world, of course. It as the weakness that we saw last week has been immediately felt in things like commodity markets, among others. What is your call on the U.S. dollar? Is this a temporary setback, and will we see further strength?
Absolutely. I think it's basically a temporary reprieve in terms of broad financial market conditions tightening. Again, the path of least resistance, at least over the coming months, is still for the U.S. dollar to strengthen. And, we can break this down into several different factors. But nonetheless, it comes down to really that the Fed needs to tighten even more so going forward. You need to get that real Fed funds rate into restrictive territory, meaning positive. Plus, we still aren't very constructive in the cross-asset space or in the real economic space for the developed market economies.
Define those markets for us, the cross-asset space, for instance.
Right. So, we're in this environment where inflationary headwinds are still very relevant. And again, this sort of narrative of peak year-over-year inflation and the airplay that's getting in the FX space to us doesn't really make all that much sense. It's really all about getting inflation back towards targeted levels, which is closer to 2%. So it's really, paying attention to the fact that there are still stickier elements of inflation that are going to be persistent. And that's going to necessitate even further tightening than maybe what the markets are pricing in right now, certainly for the Federal Reserve. And again, what we define as the cross-asset space is, of course, if we are in this environment where central bankers are continuing to tighten, that's not very constructive for the asset markets like commodities, like equities. And again, to us, other currencies, bar the U.S. dollar, are set to underperform.
What do you expect to hear tomorrow on the inflation front? The call from economists polled by Bloomberg News is for August inflation to come in at 8.0%. That's down from July, but core inflation expected to come in at 6.1%. That's up from July.
Right. So, the core price pressures are really reflective of the stickier elements that I alluded to earlier. That ties into shelter costs still being relatively high compared to prior decades. That's going to be a story that's going to be far more relevant for the Federal Reserve going forward, not least because, again, the fact that retail gas prices in the United States have been coming lower over the past couple of months is very much indicative of the fact that we are seeing a moderation in headline inflation. So again, if we do get a number closer to 8% on the year-over-year headline number, that's fine. For me, it's all about what core price pressures are going to do, and those are going to remain elevated for some time and require additional rate hikes from the Federal Reserve going forward. Of course, our call here at CIBC is for our 75 basis point hike from the Fed next week, but we still do think that the risks of non-standard hikes beyond next week are still very much there.
So the Canadian dollar has, with this recent rally, which is really the flip side of the U.S. dollar coming down over the past week, the Canadian dollar has come off levels which are 52-week lows approximately and year lows approximately. You would see further weakness then in the Canadian dollar from here if the U.S. dollar is to rally, correct?
Absolutely, yes. And we have to remember that there are key structural differences in the way that the Canadian market is going to perform relative to the U.S., and that's reflective of the fact that there's far more leverage here especially in the household sector in Canada relative to the United States. Now, remember, after the financial crisis of 2008, we saw a significant period of deleveraging amongst U.S. households. We haven't seen that amongst Canadian households over the past couple of decades. So again, the further and further that this rate hike cycle matures, that's going to become far more relevant risk, and then inevitably that's going to lead to a weaker Canadian dollar, especially as interest rate sensitive data continues to roll in and point to further weakness going forward.
One trend that's almost hidden from investors and viewers, because in Canada we measure our currency so consistently against the U.S. dollar, is the fact that the Canadian dollar has in fact rallied against most developed market currencies. I believe it's rallied against all developed market currencies this year, with the exception of the U.S. dollar. Do you expect that trend to continue?
We do think that the Canadian dollar will hold up relatively well versus some of these other developed market currencies. And again, we have to look at the reasons why. In the Eurozone, there's a greater proximity towards a recession relative to the North American economies like the US and Canada. And of course, that's tied to the fact that we're not necessarily dealing with the same degree of energy security risks that they are over there. Whereas in Australia and New Zealand, it's really a story about the slowing Chinese economy and, of course, the greater trade ties there. So, I mean, Canada should remain somewhat sheltered based on a real economic data point of view. What will inevitably hurt the Canadian dollar is, of course, the degree of leverage in our private sector. And that's going to be a relevant story, especially if we gauge the Canadian dollar versus the US dollar. But again, the fact that the real data in Canada should remain relatively robust to us implies that the Canadian dollar should hold up well versus some of its developed market peers.
Bipan, thank